This session will be moderated by CoinDesk's Jamie Crawley, and we will be getting to the bottom of how they've built their Web3 unicorns. So please join us in welcoming them to the stage.
They're coming?
And go.
Maybe we should tell them to put the mics right then faces.
Well, good afternoon, ladies and gentlemen. Thank you for joining us for this panel on building Web3 unicorns. My name is Jamie Crawley. I'm from CoinDesk, and I'm very happy to be joined by Yatsui and Sebastien Borget of Animoca brands and Sandbox, respectively. Good afternoon, gentlemen.
Pleasure to be here. Thanks for having us.
Sandbox, obviously a virtual gaming platform, and Animoca brands a majority shareholder thereof. So by way of introduction, Seb, I'll come to you first. Tell us briefly about what the Sandbox is, what it offers, and then, Yat, I'll come to you to discuss Animoca's role as a majority shareholder thereof.
Absolutely. Hi, everyone. Pleasure to be here. So Sandbox is essentially a decentralized virtual world where anyone can make 3D content as well as games and experiences, truly own them thanks to the power of blockchain technology and NFTs, and monetize them the way they want. It's a franchise that started already over 11 years ago on mobile, really with this idea to empower players, turn them into creators, and have been evolving over the years into more than a game, but a true platform offering different tools like a 3D content creation tool, a no-code game maker, a marketplace, a map, a game client as well. And we've been one of the pioneers into blockchain gaming. We've even contributed to build the open metaverse, that 3D virtual world where we're going to all interact and live more social, more immersive experiences with our avatars. And we've also been one of the leading projects in helping brands to onboard the metaverse with more than 400 major partners already.
Yeah.
Well, I mean, I think the journey for us really started when we got into non-fungible tokens with CryptoKitties back in 2017, and when we saw the power of what non-fungible tokens represented, which was a form of true digital ownership, basically where we could actually own our digital assets and therefore the derivative of our digital time. You know, we fell in love with that, and during that time we ended up meeting many companies. I sort of go back to I think it was possibly the very first real NFT conference. It was in Hong Kong in 2018. You know, you were there, Axie was there, OpenSea were there, but there was only like 200 of us, Decentraland, right? We ended up investing in almost all of those companies, but it was only because you have to remember 2018 was the big crypto winter. Like, this is not a winter in comparison. Bitcoin was like $3,000, ETH was like 100 or 2 or 150, and we were all sort of these believers in that space, you know, drinking our own Kool-Aid, and that was kind of how it started for us, where we weren't thinking to the question of as a majority shareholder about, do we want to be a majority shareholder? We were just thinking about building this new space where we could have digital ownership. And so we made investments, but we also looked at where we could offer additional value. You have to remember in 2018, there was no VC money for projects like the Sandbox. You know, even when we led the round for Axie Infinity, we were the lead investor. The entire round was $800,000, right? Those were totally different times. So in order for us to bring the impact to them, we felt that we needed to acquire the company first, which wasn't called Sandbox. It was Pixel, the Argentinian studio. And we shared the vision that they would do something. What we thought, we can help them get to that point. They had the chops. We had, obviously, finances, but we also had other experiences. We could bring maybe the Asia market. And it became a great collaboration. So I don't think of ourselves as much as a majority shareholder, as more as a great partner. And today we have over 380 investments, and many of them are acquisitions as well, where we hopefully share a similar experience, where we can work with others to help them build the open metaverse, and we share in this Web3 ethos. So that's really what Animoca Brands is about.
Thank you both. You said this isn't a crypto winter. So in this not crypto winter, Seb, I'll come to you with this first. I remember reading maybe back in April, which seems a very long time ago now, that Sandbox at the time were pursuing a $400 million funding round, which would a $4 billion valuation. We're here to talk about Web3 unicorns. Unicorn obviously being a popular term for a startup with a valuation of $1 billion or more. Give us, if you could, a flavor of how maybe conversations with investors have changed over the last few months. Are they a little bit more circumspect, a little bit more cautious? How have things been going there?
So I think I will let Yat speak on the investor perspective, and I will share more from like the adoption and user engagement perspective. Since we're a platform, we are seeing every week, if not every day, major brands from all around the world entering the Sandbox, acquiring lands and launching various activities, activation or experiences as well. We just released 3 weeks ago a major milestone for the Sandbox called the Alpha Season 3. It is a 10 weeks event featuring more than 98 experiences, including 22 major brands. You have like The Walking Dead, Ubisoft, Atari, Steve Aoki, Warner Music, just among many others. And we've seen tremendous engagement from the users in this season 3. So users are still here playing, engaging, spending over 30 minutes a day on average per experience. Every new day, a new experience is coming. So we're definitely showing that there's that there is content that's being built, and actually it's been built not only by us, but by a growing ecosystem. So the Sandbox, at the beginning of the year, we had 20, 25 studios around the world that were creating content. Today it's over 100 studios that are themselves have been hiring artists, level designers, narrative designer, and other of the jobs of the metaverse. And all of that has been contributing to the creator economy. That's a circular economy where the studio are paying artists in Sand token, and they reinvest into the platform. The brands come and they buy the land in Sand. So land market has been also very active on the secondary market, showing a lot of activity on the NFT side. I'm very confident that if we're able to show that there is engagement and adoption, no matter of the cycle of the crypto market, specifically a winter, also given that Sandbox started in 2018 into a crypto winter, that we have a good avenue ahead of us. And the year is not finished, so I think around investment, both ourselves will have interesting announcements, but also ourselves as a platform have been very supportive towards the ecosystem. We have launched an accelerator program with Brink, where we've been supporting 10 startups. And we have also announced a few investments into builder studios that contribute to the growth of our ecosystem.
Well, maybe just to add on this one, I mean, we just closed a funding round with Temasek, Boyu, and GGV last week, valuing the company at close to $6 billion, not quite. So it's a demonstration that you can still raise money in this market. And it's not really a case where there's no money. In fact, the market is quite liquid. It's just a question of valuation often, because prices have come down. Market is obviously a little softer. And people are clearly also more, I would say, careful. But there's also less competition, right? If you're a good company, you stand out. If you look at 6 to 9 months ago, there's a lot of excitement, a lot of companies that came up, but also a lot of companies that maybe shouldn't have received the funding they've received. It was just somewhat exuberant, which happens often in these waves. Those companies are all gone now. And it was very similar to 2018. Those companies, the stars of our earliest portfolios, call it OpenSea or Axie or Sandbox or Decentraland or Dapper or Wax even. These companies were building in the winter. And if you're building in a time when things aren't great, then actually you're not building it just for the money, you're building it for purpose. You have a real reason behind it. And I think this is the other thing. Investors see that too. If you're building a company that is purpose-driven and that has a big mission, which I think Sandbox has and what we're trying to support as well, then finding money isn't the problem. If you look at, for instance, gaming itself received multi-billion dollars of funding just this year, including during the bear market. Most of it went into Web3 gaming. And that's interesting as well. For anyone who was building games traditionally in the last 3 years, there's never been a better time to raise money from a gaming perspective, regardless of it being, supposedly a winter, because people see that future. And I guess it's like how Simon Sinek said it, right? It's like people don't buy how you do it, they buy why you do it. And for Web3, there's a very big why. And if you believe about this future, about digital property rights and the meaning behind it and why it's a better future in the digital world, then that's where our youth is. Then as an investor, you're investing in the future. Why are people pouring money into TikTok, for instance? Because that's where our youth is. That's what young people want to do. Or why were they pouring money before into apps? Because that's where young people are. And where are the young people today? They're in the metaverse. They're building Web3. They're into crypto.
Just following on from that point, there'll be some who would say capital will still find its way into established firms, of which you two both represent. What would you be saying then to more nascent firms who are not dissimilar to the Sandbox in that sense, who are at the early stages in this environment?
So we have now over 380 investments. At the start of the year, we're close to maybe 320 to 330. So if you look at our pace of investing, we're certainly deploying capital pretty aggressively, and we're not the only ones. You constantly still see news about companies raising money. It may feel tougher, but most of the conversations are usually about valuations. If you have a good business, if you're a good founder team, if you have some fundamentals, you can raise money. I mean, just yesterday, we saw the news about Doodles raising, what is it, a 700 million valuation. And wonderful, congratulations, and God bless them. Those valuations are still possible, despite what may appear to be a bear market. And there's, of course, less competition in the space, again, as I said earlier. So for the founders themselves, even if you're not that established, you have other avenues. You've got accelerators. We have accelerators. Sandbox has accelerators. There's also a lot of capital. They just don't want to go out and invest maybe at a 100 million valuation, but if you're willing to be a little bit more humble as the market dictates, you'll raise that money. 2018, when we made these investments, most of them, of the companies we invested or acquired, were in the single-digit millions. Those days will never be back, I think. But that's just an illustration. And yet here we have shared value across all of those portfolios. So my general message to founders as well is it's not so much about the valuation. I think sometimes founders do get hung up on it because it's a sense of pride and ego, and it's also relative. Oh, he raised at $1 billion, so I should be worth at least 2. Sometimes people do that, even if it's not the same time. But what's more important, the valuation or who's your partner? Who's the one who can take you to that next level? Bring in that kind of capital. It's not about just how much you're worth now, because you're not building for today, you're building for tomorrow. So who will be your partner to build a better tomorrow is, I think, the way that we think of it. And the right type of companies have the same attitude. And so they continue to get funded. I mean, there's a lot of smaller companies that are even pre-revenue. They're not raising at a 50 to 100 million valuation. They're raising maybe at 20 million, but they're growing.
Maybe I'd like to add, there's still a strong wave of innovation happening, and it's not like we figure out the perfect model of monetization of Web3 or engagement of Web3. So it's definitely more a matter of for the founders to be focusing as well, not on the noise, the size of the community over Discord and other vanity metrics, like Yat was saying, but into creating real adoption, real engagement, and going back to just like any business, like the core KPI that investors are looking at.
And just following on from that, Seb, back on the user engagement point, there's been some interesting news only last week, in fact, about DBS looking to purchase land in the Sandbox. I remember several months ago HSBC doing the same, and they seem to view it as a platform for powering their commercial partnerships in sport, e-sport, gaming, and so forth. Could you give us a flavor about by and large, the kind of firms who are wanting to sit down with you and discuss this sort of thing? Are we talking, those two examples I just gave are both in finance? I'd be interested to hear about sport, music, fashion, lifestyle, celebrities, and so on.
So we're building Sandbox with putting a lot of emphasis around entertainment. That's why among all the 400 major top-tier brands and partners we have from all around the world, we will find essentially fashion, lifestyle, gaming, music, celebrities, etc. Because our thinking has been around, like, if we can reach out to the fans of those brands, and cumulatively we are reaching over 1 billion fans around the world, then they could come for their favorite brand or celebrity, and then they could stay on the platform to keep engaging with all the other user-generated content we have and the other brands alike. And that's been a successful strategy so far. Obviously, we have like celebrities like Snoop Dogg, Steve Aoki, the Warner Music, Adidas, Gucci, and many others already present in Sandbox. And like I mentioned, almost every week announcing new ones. But it's also been driving something quite interesting, which is, as we're an open platform, an open ecosystem, there's been a growing interest from other actors in the broader industry, whether it's like shopping, retail, commerce, work, education, or even finance and banking. So progressively we've seen, and I really like that those brands in the finance sector like HSBC or DBS or AXA Insurance or Crédit Agricole, and there's plenty others around the world that will be announced, have been innovating and taking some risk to reinvent themselves in the metaverse. Like, they are not coming to do like what they did 25 years ago with Second Life and trying to open like a virtual branch of a bank. Obviously, that is definitely not going to work. They understood, they took the lesson, and they are thinking around like, let's be here, let's understand the space, let's learn Web3 and how users are engaging in Web3 by offering them immersive experiences related to music, to sport. We're mentioning HSBC. HSBC is one of the largest supporter of World Rugby Cup, typically, so they will have like a sport experience on their land first. You mentioned DBS, like they are creating a land called the DBS Better World about like sustainability and environment, ecology, and they are there. They are going to reward users for their engagement, offering NFTs, offering sand as part of the reward. And they're going to evolve. So one day, once we will have financial services supported in Sandbox, like you receive your salary in Sand token, you can take a loan in Sand to buy a virtual land, etc. Users will approach first the bank that are part of that ecosystem and that understood how that ecosystem works. If you're going to go on the street to meet a bank and say, I want to buy a virtual land and take a loan for my Sand token because, look, I've been building and I earn a revenue for already 2 years, they're going to look at you like, what this extraterrestrial talking about, like.
Maybe I'll just add one other point is that, when you buy virtual land, right, you're actually entering and demonstrating to the audience that you're serious in Web3. It's not just a case where you're just here to extract. You're putting into the ecosystem, you're investing, you're participating. You kind of want to signal that you're part of it. I often describe the Sandbox a little bit like the Manhattan or the Fifth Avenue of virtual land, where you have to buy something there, just like how you also then need to maybe have a Bored Ape or maybe a Cool Cat or some other collection of NFTs to demonstrate that you're here for the long run, that you're serious. But the other anecdote I wanted to share when I was talking to the CEO of HSBC, she said, what she said was, perhaps the biggest impact wasn't even the external one. It was great media and great press, and it was absolutely worth it relative to the cost of the land. But she also said that the morale and the motivation from the young people inside HSBC was electric. Basically, people were like, oh, HSBC is in the metaverse. I'm working for a cool company, or that company is thinking about the future. And that was maybe a side effect that ended up becoming maybe even the more dominant effect within the group. So I think these engagements shouldn't just be looked at something that is external from a marketing standpoint. They have very intrinsic internal effects as well, if you do it right.
Thank you very much for that. Now, looking forward in the years ahead, when we find ourselves in bull market territory again, more broadly beyond crypto and into blockchain, Web3, and so forth. What sort of case could you make for, in a sense, if you like, the bull market that we recently come out of? I sort of think of NFTs as being the standout use case from that. I sort of think when I started at CoinDesk in February of last year, it seemed every day there was something interesting dropping in from an NFT standpoint. So 2 questions in one, I suppose. One is, are NFTs now almost an entry point into this world in themselves in a way that before everything fed through crypto itself? And then expanding that into gaming. Could gaming then be the success story, the standard bearer of the next bull run? Seb, I'll throw that to you first, and then you jump in.
Well, I think like what we're noticing, and without any surprise, is like digital assets with a real utility are actually coming out as the long-term winner, because people can not only store them and let them sleep, but most importantly, they can actively engage to increase the potential earnings that they can make from such assets. And that's the exciting part, I think. That's the dominant part. And metaverse, the open metaverse itself, is probably one of the most tangible use case for NFTs. Whether you have an avatar that becomes your digital identity and then you can use as a character to explore, to socialize, to play, to build, to create, to talk, to chat, and do many other things. Or it's a virtual land that you can own and publish an experience to allow other users to access or even rent, etc. Or just gaming items. It's just common sense, and we're glad that we, as an open virtual world, we're providing value to an overall ecosystem. Beyond the core gameplay, the core loop, or the core service they provide, we're a place where any community can come, can engage, can socialize, can build, can become creative, and can be part of this concept of neighborhood with their land that Yat was describing as well.
When you look at the things that have driven mass adoption in history, it hasn't been money per se. Money is a vehicle and a tool, but it's culture, right? Mass adoption of culture. Is it movies? Is it film? Is it music? Or is it games? These are all forms in which we engage as culture. And as people broadly, we identify better with culture than we do purely with money. If you look at the history of crypto, it's first started off with, I enter crypto because I want to own Bitcoin, because the value goes up, which means, or hopefully it goes up. So basically, it's a purely speculative purpose. But when you enter it for culture, which what NFTs initially represented, you might buy an NFT because maybe you hope it goes up in value, but you also buy it because you love it. How many times do you hear people who have a Bored Ape or land in Sandbox or something and say, I can't sell this, I'm attached to it, I love it, which is what we do with our own physical items. We fall in love with our watches, with our clothes, with the property we own. I mean, logically, we should sell it, but we don't, because there's memories, there's attachment to it, right? So these are one of the big areas where I think why mass adoption is happening this way. And if you look at the mass adoption that happened in the last year and a half, it entered through blockchain games, it entered through NFT art, it entered through culture. And we're just at the beginning of this. So I think it will continue to have this narrative, but it might not necessarily be as dominant as NFTs. I think last year, NFT was kind of unique, it was interesting, curious, and also controversial because of all the FUD that was going on, because of the environmental debate, which will probably, after the merge, all be gone anyway, if they know what's going on. And then just generally, we think gaming will be the pathway of mass adoption. There's 3.4, just the stats, there's 3.4 billion people who play games today. Ask any gamer whether the items that you're using in the game is one they think they should own. And everyone will say, I don't own it already? I thought it's mine. So we're really not changing the paradigm. We've created a generations of people educated that know that virtual item ownership means something to them. Ask our children what they want for Christmas. It's very likely something virtual, right? So that is already there today. And so we're really just moving an audience that's already half foot in to port them over. So we think the space will grow tremendously and will grow faster and more accelerated than we have seen with mobile or with the internet adoption at large.
Thank you, and thank you, Seb. We are just about out of time. So thank you very much for your attention, and thank you to Yatsui and Sebastien Borget from Animoca Brands and the Sandbox, respectively. Thank you very much.
Thank you,
Thank you.
everyone.